Thanks, guys. Well, thanks for that. Appreciate being here today, and obviously we've put together a bit of a session for you guys that's hopefully going to add some value to your business. And finance is such a broad topic, so obviously keen for those questions as we kind of work through it. So just a bit about me and my experience. I'm not your really typical accountant. So I'm a chartered accountant, worked in tax for 2 years when I was 19, and I hated it, so I left. Went and worked in corporate and then started working in startups in my own business, which is probably more of an education in finance than really kind of working in a services firm. From there, I built a couple of businesses. One's a coffee roasting business called Charlie Coffee. We've got cafes in Sydney, Brisbane, and a wholesale roasting business. And a few other startups along the way. Then I became a partner in viability and started the outsourced finance team and division. And I say this to say that I know what it's like to build a business. I know what it's like to be that finance guy building a business, and hopefully that experience can come across to you guys and can share some insights in your own world and your own businesses. Also, my other passion is angel investing, and done a few along the way in a business called Touramigo, which is an online travel site, and Spaceship Super, which is another business I'm involved in, which has got some press recently. So that's me. Who is Vile Edition? Just a bit of background on the firm. So we've been around about 3 years. We're a multifaceted financial services business. We predominantly work in accounting and tax, compliance, etc. Outsourced finance team, which is structured, what I call a corporate finance team that can work with your business, anywhere from bookkeeping to management accounting and CFO advisory. So we work with a lot of startups and SMEs, venture capital-backed startups who need that extra level of experience, advice and strategy over and above just kind of preparing the books and lodging your BAS. We also have a wealth management arm, financial planning, etc. So. Let's try to go down. And we've frozen. There we go. Okay, so what are we going to learn today? So I've got 4 topics to cover. Obviously keen for some questions in between that. Hopefully this has some relevance for you guys where you're at, but we've got obviously the session tomorrow as well for anything further. Business structures, common mistakes to avoid, cash flow. I know we had a session before on cash flow, so just reiterating some of that and taking some questions. And just some top 5 tips from my experience and our clients around what you can do right now to improve your finances in your business. Business structures, it's really critical to the success of your business. I know a lot of people would have said that, but if you don't get this right from day one, it can cost you a lot of money. If you start to succeed in your business, your structure's right, it's kind of this added weight that can really screw things up, and a successful business can fail with the wrong structure. So there are 3 different types of structures I'd like to talk about is a sole trader, a company, and a partnership. We'll just go through the pros and cons of each and take some questions you might have as we roll on through. Sole trade is probably the most basic form of a structure, trading structure, and really it's easy as registering ABN. It's in your personal name, that's your business. You declare all your income in your personal name. It's a really low barrier to entry, simple to set up, and very low regulation. So that's the pros there. The cons are there's no asset protection for you guys. So if you have a business in your name, something goes wrong and they sue the business, they're suing you. So any assets in your name they can attack and take and potentially take off you. There's also no way to save tax. You're just paying the highest marginal rate as your business grows. Company, so this really is probably the main form of business entity. This provides the strongest form of asset protection. So whereas you've got you as a sole trader or company as a separate legal entity, which means that if someone sue your business, they're suing the company. So it's what they call corporate veil. So you are protected as a shareholder from any litigation. Tax planning opportunities. So as a company, you can sit down and work through. Do we pay a dividend? Pay a salary? There's various different options you can work through your tax agent around how to save tax, as well as some small business discounts when you sell assets, when you sell the business. It's also a really good structure if you've got more than one shareholder and one business partner, because it's very clear what each party is getting. Having a good shareholders agreement is important for that as well. But it's just an easier way to flow through as opposed to a sole trader or partnership. And a sole trader it can only be yourself. The cons are the higher setup costs and ongoing costs of compliance, extra tax return, and it's very heavily regulated by ASIC, which is a con, but if you're doing the right thing and you're lodging returns, etc., you should be fine. The third form would be a partnership. Essentially, I know no pros on doing a partnership. If you're going to go down that path, you may as well set up a company. It's a bit of an archaic form of business structure. And again, there's no asset protection, same as a sole trader, and you can't plan for tax or make any benefits on tax. So whilst people will throw this around as an option, I would steer clear. So in terms of when you're going through, obviously the ideal is you set the business up properly from day one, but if at some point you need to restructure, say from a sole trader to a company, it's really important to do that with the help of an accountant. As you see the business start to grow and it kicks off, make sure you do that early. You normally can save a lot of tax on that, otherwise it can be quite costly to do that. So any questions on the business structures? I know it's quite a brief introduction and for anyone in terms of their business.
Is it best to set up a company as soon as possible?
Yes. Yep, that's my advice. So all the businesses I've done, always set up a company. The shareholders have a shareholders agreement. It's all locked in, so you're just planning to grow. Because no one's really going to start a business necessarily earn 50 grand a year, which is kind of where the maximum comes for a sole trader. So if you're going to grow a business that's kind of worthwhile, I'd set up a company from day one. Any other questions?
I'm about to not set up a partnership, but partner with someone to open a second gym.
Yep.
Should we set it up as a company instead of a partnership?
Yeah, I would set up a separate company if it's kind of its one business. So obviously, it's similar to your existing business, but a separate company, different shareholdings, an agreement around how dividends work, all that kind of stuff. Not necessarily. So being a shareholder is different to being a director, which is more about control. So that's something you guys would need to work out who's in charge, who makes decisions for what. Because you can be a minority shareholder but control the company if you've got the right director kind of status. So that's something you need to work through with a lawyer. So what we did in our cafes, because we rolled out and scaled our business and so this is the cafe business I started. We had a cafe on Kent Street in the city, which is a separate company which we had investors for, as opposed to our holding business, and that worked quite well. So people wanted investment. Cafes usually, if you do it right, are kind of a good investment. So we raised capital that way, and it was just easy. We had a shareholders agreement around it. Had very clear guidelines around dividends and payments. So that can be quite a good way to scale your business if you're looking at location by location.
If cost is an issue, is it better to start a partnership and move into a company after? Because set up a company is quite expensive.
It's about $1,000 set up a company. Yeah. Sorry? Yeah, well, a partnership, it's simple as well. It's essentially free, so you can register an ABN or a partnership.
So how about you set up a partnership to start with and then once you start?
You can do that. You can roll into it. So if you have a partnership, you can roll that into a company at some point. I think my advice would be wary as to what stage that needs to be before you start to incur a big tax bill, which your accountant can obviously advise you on. So it's still an option. It's just, it wouldn't be what I do, but if costs are tight, then yeah, it's something you can look at.
How much profit should you need before you think about that break-even point in your business regarding tax?
In terms of the structure?
Yeah, in terms of going from a partnership to a company. Obviously, there's other benefits from a company.
Yeah. It's hard because you can split income in a company. Like in a partnership, if you earn 80 grand in a partnership, you got to pay tax on 80 grand. Whereas if it was in a company, you can go get other deductions, you can go pay the company rate for that, pay dividends, pay other salaries to your kind of spouse, etc., assuming they're doing some work. It's just a lot more flexible. So normally I say around 80 grand is kind of the tipping point, but there's other stuff you can do in that. Any other questions? Okay, common mistakes to avoid. So this is experience. So some of the partners and I sat down and worked through what are some of the big mistakes our clients make, which we go and fix for them when we start working with them. And this is just what we pulled out. Happy to answer any questions along the way. So one of my first bosses told me you can't outsource commercial thinking. You can have a good accountant, you can have a good lawyer, but you have to know your numbers. You have to know your business back to front more than your advisors. Your advisors can teach you and help you learn, but you really need to know your business back to front. Stuff like, what's my break-even point? What's my margin on my revenue? What are my sales targets? What are my overheads? Does that go up and down? That's really important as a business owner. You get that. And if you don't get that, sit down with your accountant, say, here's the stuff I need to know. We need to work through that so your business can function focused on that, as opposed to some people we've worked with. It's just, the accountant's got the numbers, they'll work it out. I'm surprised I made a loss this month. That should never be a surprise for a business owner. So important, whilst you don't need to be an expert in preparing financial statements, understanding the difference between stuff like accrual versus cash accounting. It's really important. So cash being money that's come through in and out of the bank statement, and accrual being money that's been spent and earned. So it's really important that whilst you might have 100 grand in the bank, you need to look at your profit and loss in your balance sheet and say, what have I spent already? What of that money is owed to the ATO, other suppliers, etc. So that's where reading that profit and loss, understanding your balance sheet is really, really important. So the key stuff for your balance sheet, I would say, would be your creditors, the ATO. ATO is a big one. If you don't understand how the ATO payments work, you need to learn. We'll go through that in a bit more detail. And also your debtors and your revenue. So if you think you've made 100 grand and your P&L says 100 grand, you high five everyone, but there's still outstanding. You're not going to do much good, because really cash in the bank's what you're after. I always tell my clients to question everything, even question us, to make sure they really understand what we're saying. Don't just take people's words. It's up to yourself as a business owner to learn, take stock, and that's what the advisors are there for. They're not there to do it for you, they're to guide you and to teach you. So of all the problems and kind of reasons that businesses fail, this is probably one of the key ones. So first of all, it's paying yourself too much too early, not understanding how you can pay yourself and the taxes around that. So I reckon 9 out of 10 of our clients, when they come to us, will have an issue with, I owe the ATO money because I pulled out too much and I forgot to pay tax on it. I didn't realise I had to pay tax on it because they were taking a salary before some other job and there was PAYG and they just get confused by it. So it's really important. Our advice is to make sure that you know what you need to live off at a bare minimum. And as a business owner, as you kind of start out, keeping that cost really low as much as you can. Not everyone is in that situation, but that's certainly my advice. Understanding then what the business can support in terms of a wage. It's very, very important. And work through that with your accountant. What sales do we need to hit? Is that realistic? How much cash is in the bank right now? What cash flow have we got? Do I have to make kind of my best sales month ever to pay myself the wage I want? In which case we need to kind of revisit that. The last point there is just in terms of having two business partners, which is probably a bit controversial, but I always think about wages and dividends separately. So wages kind of what you're earning for the job you're doing, even as a business owner and a founder. And dividends is your return on your investment, whether it's time, capital, or your ideas. So that can be different. So, two founders have different roles. One's valued more highly than the other. They could have different salaries. But in essence, they're both shareholders in the business. Is there any questions on that point?
So just saying, there's no reason why you're asking, you and your business partner can't have a different salary.
Yeah. Well, the profit we split is kind of what's left over. So say you've got two business partners, one's gun CEO, one's gun IT manager, and they're both great at what they do. It's both their ideas, but actually working in a business, they're valued differently. And if you had to rehire that, they're valued differently. So it's not everyone would do that way. That's kind of our view and our advice. That's probably something you talk about before you start the business, or as business grows. Yeah. Just to split up the difference between being a shareholder and being an employee, which you can be both. Any other questions? Lack of cost control. So this is all comes back to understanding your numbers and your profit and loss, but spending money you don't have, or spending money without really going through a process of sign-off. So when you're running your own business just by yourself, it's easy to understand and kind of go through that process. But when there's more, multiple founders or a bigger business, you need to have a set process before you spend the money, as opposed to when you just pay it. So getting an invoice you have to pay is you've already spent the money. So having a process before you go to that point is really important. So who can sign off on what amount? Is it 1,000, 10,000, whatever it is? What do we need dual sign off for? How does that work? Really important that that's kept under control. As your business grows, every dollar is valuable, right? Every dollar can be spent on marketing, that's wasted on X, Y, and Z. Sales, etc., is critical. And making sure you follow that example and set that example for your team is super important. Not planning for tax. So, like I said before, the balance sheet's your friend. Understanding what you owe, the ATO. So just because you've got $100,000 in the bank doesn't mean it's all yours. Is what I always tell my clients. It could be none of yours. You could be negative, but it's just really important to understand what's the difference between having cash in the bank and equity in your business. Actually, money that's yours. So we can kind of work through that in the session tomorrow. But really important you understand how that works. It's, GST, POIG is lodged quarterly or monthly, depending how big you are. Putting cash aside, I always advise our clients to have a separate bank account that's for tax. So here's the monthly report, that cash now goes to the tax account, so I'll never be caught short. And one important thing to note is that it's really important to be across that, because if things go pear-shaped, the ATO could come after you for those debts as opposed to other debts, which are just kind of rolled into a company or whatever structure you've got. So it's really important you cross that. Is there any questions on that slide in particular? So in terms of your business, I suppose, especially your finance function, preparing to scale, hiring staff, having the right process in place to hire the staff, it's very important. When you start a business, in terms of your finance function, having the right reporting framework, your accountant to set up kind of what the business would look like in 3 or 4 years' time, ensuring you track all your key metrics. It's really important, especially as you look to either sell the business or take investment. If you haven't got that documented, as a day one we did X revenue, these are the metrics behind it, and that kind of rolled on to this point 2 years later. So many of our clients will come to us without that information, wanting to sell a business. And you won't get as much for it, and you'll pay kind of $1,000 in accounting fees to prepare it. So it's important before you start, or as you kind of in your early days, to have that together.
Can I ask a question back there?
Yep.
I was just thinking, but I thought it was
Sure.
So you said setting up the reporting framework, accountable and records and metrics.
Yep.
So what exactly do you mean by that?
So having like a monthly kind of board pack, which is profit and loss and a balance sheet. Your key drivers in your business, where it's custom numbers, new customers coming on, customer acquisition costs, churn, all that kind of stuff. So we work with some businesses that are taking $5 million investment, been around for 2 years, and they've got none of this. So that's, if you can do that, you're well ahead of the game. It's also for your benefit as well. You should be interpreting that, understanding it, implement it to your business. So I know you guys went through cash flow before, but I just thought I'd make a few quick points, which I just made previously. So obviously money in the bank doesn't always equal profit, and vice versa. So we talked about that in terms of the GST, etc. Making sure you've got a handle on your aged receivables and aged payables, and the days it takes you to collect cash and also pay. So if you're paying quicker than you are collecting, you've got this massive cash deficit. So it's important to have the other way around. So you're collecting cash in, you're paying cash out as much as you can. Sometimes not always the case in early days, but that's the ideal and that's the goal. Yeah, obviously only paying people's when they fall due. And my last point there is really important. If you're not a finance expert, understanding how to forecast the cash flow, sticking to it. It's 10 guys this week, these guys next week. It's basic stuff, but if you can stick to that, it'll certainly save you a lot of heartache. Do you guys have any questions on cash flow after the session before and anything burning? No?
Everyone's got their cash flow sorted.
Brilliant.
Everyone's super happy.
Brilliant. They seem happy.
Knows where they're hiding all their money. There's no, I just don't want anyone to feel like, I know sometimes with topics like this, like there's no dumb questions. There's no questions that anybody else in the room knows that you don't know. So it's just excluding, obviously, a few people that are clearly very versed with this. I just want you guys to understand, like GST, KYG, things like that, especially as you guys are growing in any scenario, you're bringing on staff or changing employment structures or changing partnership structures, anything like that, all of these things are going to come into play. So I just want to make sure that if there is a question that even it seems like a silly question, now is a really fantastic time to ask. You can of course ask a lot of more personal questions tomorrow, but if there is a question that you're not sure about with stuff, please stick your hand up and ask.
Payroll tax.
Yep.
Coming up to 500k in wages.
545, I think it's in Victoria.
So it's better to have, like that's why we have all that company separate with RBT, so you keep
Yep.
payroll tax away and pay the government less.
Yeah. There's some grouping rules.
The goal is to pay them as less as possible.
Yeah.
So would you say for someone like us, the business coaching, right, where our payroll is about to pass that,
Yep.
should we split the company in two, or is there another way to not pay payroll tax? Because that is the one tax that I feel like I can get around.
Yeah. I mean, for me, payroll tax is such a counterintuitive tax because you want to hire people, you want to pay more tax on it. So to me, it's stupid in the first place. It's very hard to get around. Once you go to a certain size, it's almost inevitable. You'll pay that because the NCO will pull together and say you're a part of this group or you're a part of that group. And there's ways you can structure it, which is kind of well outside my remit. But there is ways, but in essence, you'll get to a certain size where you can't avoid it. So it's more of a short-term solution just to save you some cash along the way.
Just make
Any other questions?
Do you have a process or thinking around with the scaling and projection of cash flow and then in those points where you need to expand staff at
Yep.
the same time? Do you have a process that you use around figuring that out?
In terms of when's the right time to hire,
Yeah.
I always think any forecast should be related back to the business plan. So if your business plan says X, Y, and Z, your forecast is reflecting that. So the forecast helps you kind of have a check on, well, can we afford to do this? If we can't, back to the business plan, what can we do around that? But if you can, and the cash flow is saying, yep, there's cash there plus some contingency, we can cover those costs at break even or maybe a small loss for 2 months. So just being conservative around what you believe your sales can do. If your sales are going up 20% each month and you're making a loss for 2 months, but you got cash in the bank, but it's gone like that, fine. But it's also your gut around what you think your revenue will do. So having those scenarios, well, if I miss the revenue target by X, it ends up making a loss. We're going to run out of cash because of that. So it's just having those kind of particular scenarios worked out. If the business needs the head count, sometimes you just need to work the kind of forecast and the costs around that and back yourself to go off and make the sales and grow. or get investment to do that.
Instead of paying yourself a higher wage, what would you do or run through the business to work that way?
Yeah, so you can actually run through your car through the business, some business travel, which you can kind of combine with other activities. Paying yourself dividends through to say your family trusts, which means you can split up with your partner or your kids or whoever else. It really depends on how much you need to live off and how that works. But salary, car, travel, some home office expense, and like a dividend, so you can split that income and take advantage of the lower brackets.
Those dividends are fully franked. You do either one.
Well, fully franked means you've already paid tax on it. So if your company has done that and they've got franking credits, so if I paid 100 grand of tax, it's 100 grand franking credits. So if I pay dividend out, that's kind of already been paid tax on.
You can take a wage of like 65,000, whatever the 30% threshold is.
Yep.
And then pay the remainder as complete profit, and then pay your tax on that, and then give yourself the profit and dividend to that, and then it's only taxed at 30%. Is that?
So you're saying pay yourself a wage of say 65 grand.
Yeah, so whatever the 30% threshold
Yeah.
is for you.
So
I don't know, it's
it's around 80 grand. Yep.
80 grand. Okay.
Yep.
So you pay yourself 80 grand, you make 100,000 profit,
Yep.
pay 30% on that, and then you give yourself 70 grand worth of fully franked.
Yep. Definitely.
Is that reasonable?
Yep. 100%.
Is that the best way to do it?
You can't. There's probably no net benefit straight out, but it's when you start making more cash, you can pay the tax in the company, pay yourself a dividend, or if you want to utilise that cash for investments in the trust, say separate it out, you can pay that across, have a company that receives the distribution. This is getting a bit more technical. Pay tax on that, but have cash in your family trust to buy property and all that kind of stuff you might want to do, which is better to have that property in a trust as opposed to a company. So it starts to get a bit more complex, but that's how I'd set it up. Yeah.
So we're saying that all of these guys are scaling to multiple businesses at the moment, right?
Yep.
I don't advise on anything because I don't know to advise on anything at all. But I normally say what we've done is open up the separate companies, right? And the profits go into a trust, as you say at the moment.
Mm-hmm.
I open up with partnerships, and I know some of the other guys open up with partnerships. They're other businesses, so it's a 50-50 share profit distribution, and it can happen on a weekly or whatever it is basis, right?
Yep.
But with that there, where would you advise? Would you say the best place to do that is to put into like a family trust?
Yes.
So we can minimise the amount of tax.
Well, and the only way to minimise that is to split it out. So say you're just single, got a family trust, just yourself.
I've got a kid that's 2.5.
Brilliant. Yeah, so that's exactly what that's set up for. So you can pay yourself those profits. You can kind of work out where's the best way to distribute it between yourself and your missus and the kids. And then there's some rules around that, but that's the best way to save tax. You'll never avoid it, but that's the way to kind of minimise it.
Can I say your kids are?
Nick's going to be busy, mate.
Up to a certain point.
How old are the kids have to be?
Up to 18 is kind of a set number that you can distribute like a set amount. After that, you can as much as you like. So it's like $1,000 or something
You
like that. So.
can distribute it to the elderly as well, if they don't have a job.
Yep.
And if they don't have a pension.
Yep. That's right.
It doesn't matter.
Yeah, so you can distribute to anyone you like, really. It's within kind of your context, your world. So where it's kind of mum or dad or stepmom or dad or however that works, and you just need to be in discussions with them around how that works for them, kind of what's their scenario, etc. So a lot of our
How happy you are to give them cash and how happy they are.
So a lot of our clients will have a family trust and have their kind of in-laws that are just retired and they don't really kind of care about getting a distribution. So they'll just take that, save the tax.
How does it work with other countries? My family is in Sweden. I pay that.
Not sure.
I'll just skip it off and just don't worry about it.
Yeah, I'm not sure actually. It's a good question.
Are you saying that the potential, say your potential profit's 100 grand?
Yep.
Are you saying that rather than paying the 30% company threshold, you could put 80 grand of that into the trust? Are you still paying tax on that 80 grand, or are you saying that's a way to not have to pay any tax on that?
No, so you still pay tax. So the way it'll work, you go from your company, say it's 100 grand, say it's a 100 grand dividend paid out to the trust. That trust has to distribute it's people that are part of that trust, and then after that, it's about, if you say it's 50 grand each, so you'll pay tax on 50 grand each individually, as opposed to paying tax on 100 grand, which is a higher marginal rate.
So you're not paying 30%, you might be giving them each 18 grand, which are 10% is paying nothing.
Exactly.
But you have to have people that aren't earning a wage.
Correct.
Got it. Okay,
Yeah.
that makes
So that's where having kind of big family means you'll save a lot of tax.
sense. And does it cost a lot of money to set up a trust?
It depends. So you can have it's probably about 2 grand max, depending on kind of what structure you want. It's expensive, but you'll make that back eventually for a couple of years. It is possible to transfer your shares from yourself to a trust at some point and roll it over and get some exemptions on tax for that. So there's provisions around doing that later on.
So my mum doesn't work.
Yep.
Doesn't earn any income at all. She's not retired or anything. But if we draw a dividend or like pay her a dividend, we have to physically see the money leave our bank account
No.
and go to her? Or
No.
it's just done on paper?
Just on paper. So there'll be a loan from the trust, from her to the trust, but ultimately no. Anything else? So this is our top 5 action points. All right, so finance is a term we coined at Viola Edition. This is really about the working rhythm in your finance function, your business. So when we talk about the 4 I's, we talk about information, insights, ideas, and initiatives. So we'll go through what that means. Essentially, that's in our kind of expert view, and what we're trying to do for our clients is implement that working rhythm with the CEO or the owners, so that they can get maximum benefit from that finance function. Information, pretty simple. Having accurate, well-prepared data. So profit and loss, balance sheet, cash flow forecast, customer profitability. Getting that prepared really well and by an expert is important, because without that information being correct, everything you do from here is going to be a waste of time.
So customer profitability as an average client value?
Yeah, yep. So average client value, how much margin you make off that client over what time. Important. Chris.
So all this information, is it best to just pump it at our account and just go, well, I need to have a meeting like
Yep.
once every month? Or?
Yeah, just structure that kind of cadence. So you've got monthly on working day 8, 10 or whatever you can achieve. I want to see the profit and loss, the balance sheet. These are the reports, and maybe reports you guys bring as well. You talk about, you go through your 4 I's, here's the information, it's all correct, I'm happy with how it's looking. Insights, we go through as well, pull that out. What can we garner from this report? What's up, what's down, kind of what can we take out of it? And ideas, what can we do to fix this? And then putting the initiative in place in the business, say, well, we need to get X amount of kind of new clients on because of this target, here's the initiative to do that, you're in charge of that, I'm in charge of this. And you come back to information the month after, so how do we go? You know, what do we do there? Yep. And this is...
You're using like a mile or a zero to run their cash flow, or just run a spreadsheet?
Spreadsheets are so much easier than trying to get... I find spreadsheets easier. So I personally would use Xero as an accounting platform over Mile, just in terms of how easy it is to use and how universal it is now. Cash flow is still hard to find a software that does it effectively. A simple spreadsheet should be enough. As you get bigger and bigger, you probably want to hire someone who can do some more detailed financial modelling, which is stuff maybe outside your skill set, but that's something you would need. So yeah, that's what I would put in place. Yeah.
How does my bookkeeper get involved? I just ask him for some information and just send that to my account?
Yeah.
I just have a meeting with the accountant?
Well, the account should be telling the bookkeeper, I need X, Y, and Z done by this date, because I need to have a meeting with the guys on working day, whatever it is.
Yeah. You better organise a meeting with the bookkeeper and
No, I think just the account should be enough, as long as the bookkeeper's done the reconciliations and kind of all that kind of stuff. But the account should be driving that. Yeah, that's their responsibility. So like I was saying before, insights. What can we pull out of a report? What are our advisors telling us? Ideas. What can we change or move forward that's working, not working? How's this going compared to our business plan? How do we shift some of this stuff? Start to ideate in the business, and that's really business planning as well as finance, really, which is where the finance function should fit into, help you execute your business plan. And having clear initiatives, actionable initiatives attached to people who are going to deliver it, and you loop back to your information. Well, how did I go with that? Did we execute? What are the results? Is what we thought? And once you get that working rhythm, each week, fortnight, month, you'll start to see your business move forward, and you'll start to see those results. So, any questions on those 4 I's? So these 4 I's is some of the stuff that our top clients will do with us, and we'll do with them as well. So we work with a lot of high-end venture capital funds. It's not us kind of blow our own trumpet, but this is the kind of stuff they'll put in place with all their team. Why we look at a report, there has to be steps outside of that, just rather than just reading it, putting it to the side and moving forward. Working out your unit economics. So this is really key to your business. So how much you acquire for, how long you retain a customer, and how much money you make off them is the core to your business. If you're acquiring a customer for more than you're making over that period of time that they're with you, you may as well pack up and go home because you're just losing money. So we've got clients who come to us and spending $100 acquiring a customer, making 50. I'm like, well, not saying that's a bad business, but that needs to change. And having the insight and pulling those numbers out is really important as a business owner. Working that out can be tricky, depending on what business you are. Online business is fairly straightforward because you've got the digital marketing, you can track your customer, how long it's there for, how much you're making, it's a bit easier. But there's other businesses that might be a bit tricky. But if you can think through that and come to some sort of estimate around that, it'll certainly benefit you. Because knowing this will mean you know what levers to pull. There's more marketing to get better. I'm paying too much to acquire a customer. Need to raise our price because we're not making enough off them. Our clients are leaving, why they're leaving, we need to fix that. What's the reasons why they're kind of going? And if you can start to shift that, you'll see a massive increase in your return on your investment. Because instead of spending $50, you're spending $10 to acquire a customer. They're staying 2 months more, you're making $10 a month more off them, it just starts to exponentially increase. So one of our other tips is clear process for payments. We've got one client we picked up, a couple of clients that have just had massive debtors, and these are established businesses you may have heard of, which I won't mention today, but you'd be surprised. Having a clear process as to when you get paid is important, and it's not just you saying, we need you to pay on this date. A lot of the bigger companies will be like, that's great, this is what we do, this is when we pay. So you need to understand what that is. So big companies like Microsoft pay 90 days. So there's no point saying your terms are 15 days or whatever it is, or 30 days, when they're never going to pay that. So you need to understand who needs to get this invoice, sign off, when we're getting paid, put that in the forecast, rather than just letting it sit on kind of someone's desk in some corporate. And you're just like, oh, when are they going to pay us? And we're calling accounts, and I haven't got the invoice, blah, blah, blah. So having a clear process with your clients, as well as saying, this is what we expect, what do you guys expect, what's your process, will save you a lot of heartache and work. Negotiating key supply terms, fairly straightforward, but can be key. In the coffee business, we did this. We always kind of push this every year, getting the best price on coffee beans, and it's all that margin industry and payment terms. So if we've got better payment terms, our cash deficit decreases, which means we're not having to find finance or whatever it is for just running the business with working capital. Another lesson that some of our clients learn pretty quickly around knowing who they're going to pay each week and actually doing that, rather than saying, oh, so-and-so just called me, he needs a payment, he's sounding pretty upset, so I'm just going to pay him straight away. That's a terrible process. You need to make sure, and advise your like suppliers when you're going to pay them on that date, make sure they can rely on that, and if they complain about it, say, well, no, this is a process. And if it's really an issue, negotiate with them. But having that will save you a lot of heartache. You come to supplier payment, you've paid, so and so, you've never got cash for the key supplier. It's really important. If you've got a process, stick to it. Foresight over hindsight. You as a business owner need to understand what's happening with your key metrics and key numbers, so revenue, cost of sales, and payroll. Have we hired someone? What's happening with our sales this month, etc. A lot of our clients, when they come to us, they just wouldn't necessarily know. Or they have an idea, but they wouldn't really be able to kind of give you a clear number. So the better you get at this, the better you are at managing your business. Because everyone knows when you're growing, there's a million things you want to do. You don't have a surprise in the month, oh, we did half the sales we thought we were going to do. So maybe a cash flow issue, or do X, Y, and Z. So being on top of that's important. Like I said before, one of your questions, having a financial forecast that relates to your business plan, not the other way around, is really important. The forecast really is just an outworking of what you want to do in your business. Having a clear strategy is the ultimate goal, and like I said, the forecast will just be initiative X, we're going to spend this, we're going to spend Y. All that stuff's really, really important for you to pull together. And a last point is, your business requires funding. Make sure you give yourself plenty of time to get there. Everything you can raise capital in 2 months, you can get a bank loan in a couple of weeks. That's not necessarily the case. I'd always give yourself 3 months, 3 to 6 months to raise capital, especially equity. Bank loan's a bit more straightforward, but you've got to give yourself enough time in your business, otherwise you can cause a lot of issues, and business can come to a stop without it. Yep.
So I've done business plans in the past, but now I've been a freelancer and
Sure.
I didn't really have a business plan, and now I'm starting to get more work and
Mhm.
I need to create a vigorous business plan.
Yep.
But do you have a structure that, like, there's lots of ways to do it, a business plan, but do you have a structure that you find works really well with the forecasts?
Not really. It really depends on what business you're in. So I always like to keep everything I do, I like to keep it simple. So if it's about what customers we're going to get on, how we're going to get them on, so marketing, how we're bringing customers in, what we're doing to service them, the costs around that, and what support do we need outside of that, and how we're going to retain them. So having really basic kind of, here's your different core function of business, and then costing that out. So sales and marketing, customer service, overheads, management, admin, etc. Yeah, it's something you need to kind of work through in detail.
Yeah, of course.
Any other questions? Yep. Nope. Oh, there we go. All right, so the last point is really important. This is not us giving ourselves a plug, but in any business you've got, you need to find trusted accountants and advisors. What do I think is someone that's a good accountant or advisor, someone that can advise you through different stages of your business. As you scale, they'll scale with you, or they realise, hey, you're getting too big for us, why don't you chat to so-and-so? So that's really important. So you don't want to be in a place where you're telling your accountant, I think you understand what I'm doing here. You want to make sure you can find someone that says, hey, we deal with businesses that start up to 2 mil turnover, this is where we're at. So when you get to that size, you can go and find someone else they recommend. You want an advisor and accountant that's going to keep up to date with changes in technology. We have some people who come from other accountants that still want to use use MIB or QuickBooks or some of those more basic accounting packages, which is, to me, doesn't make any sense. So you want something that's going to evolve with that. The accounting industry especially has got a real difference between the old guard who kind of still want to use whatever systems they want to use, and people like ourselves who come out and want to improve and reduce the time input from our clients on their finances. And it's really important because the time you save there is time you can go off and grow your business. And the last point is just where possible, agree costs up front and get clear deliverables. Most accountants will look after you, but there's been some, obviously everyone's heard of some horror stories where they get some massive bill from their accountant, they're not quite sure what they got for that, and X, Y, and Z, and it comes this big kind of shit fight. So important, what's it going to cost me, what am I going to get out of it, have it in writing, engagement letter, and you'll be fine. Any questions? Cool. All right. Thanks, guys.
Thank you.
Thank you.